And one of the things that I don't see that additional spending really fixing is what we're seeing in new construction, particularly the condo market. And a lot of that has had to do, honestly, with the pricing corrections, to be honest. Like when those prices came down, we're down over 19.5% from the peak of 2022. And you look at people trying to close on new construction that's happened and things just not appraising. Like that's been one of the biggest challenges, I think, currently, is getting buyers, the existing buyers, to even close on anything. We've been in touch with a bunch of real estate lawyers that are watching that, and we're, of course, watching the news as well. And that seems to be one of the biggest challenges. And then what we saw was, of course, new sales really fall off a map, right? And if the new sales are falling off, well, then they're gonna slow down on their building. So talk to me a little bit about what you're seeing in new construction in particular.
Well, the next slide, I mean, I should have just included it in this slide because there was only 42 new condos sold in the city of Toronto. And that's staggering when you really think about that.
About the most amount of cranes we've had in the sky, right?
Yeah.
And then we're only selling 42.
And now we've sold 42 condos, and that just shows you that at the end of the day, it's investors that invest in condos, because the average buyer is not going to tie up their funds for 5 years while a condo gets built. So for an investor, it's, hey, loan us your money for the 5 years. We'll create the condo. And then, with inflation, depreciation of currency, it'll be worth more in that 5 year period. And you can kind of make your money on the flip, selling it into the market or renting it out. But when Doug Ford came in and changed the rules to the rent caps in 2018, we had a huge amount of purpose-built rentals get built as well. So now we're in a situation where all these condos got built, but also all these purpose-built rentals got built. So the rent isn't covering the fee that these investors need to hold it.
Especially as interest rates have gone up.
As interest rates have gone up, yeah. But the rents are actually falling now because you had all these condos and all these purpose-built rentals hitting the market. Plus, people were putting units in their homes and in the subdivisions and all that as well. So it's a bit of a perfect storm we're seeing right now. So if you're an investor or trying to buy one of these properties, it just doesn't make sense. You're going to be losing too much money. Whereas before there was incentives to hold it. But right now it's definitely the market we're keeping our eye on the most, because there's a lot of potential downsides to this. If we start to see full size condos, too many people walking away from the deal, you could start seeing them go belly up. Yeah. And there's a lot of people like Ron Butler and a lot of other people that have YouTube channels and stuff like that have been in the business a very long time. And they've been saying for the first half of this year, the second half of this year, you really got to watch, is there going to be a condo building or builder that goes belly up because of this?
Yeah, because they just can't get enough occupants in on closing. And I think the other thing that we talked about a lot, obviously you'll see it as we break down our slides on the condo market, but just the amount of inventory for condos is the highest it's ever been. And so obviously with that amount of choice out there and the lack of sales coming through, there's a lot of downward pressure continuing on prices. Now, when we broke it down and we started looking at comparable sized units, specifically ones that are more family sized, the larger 2 beds and the 3 bed units, they're not hurting as bad. They're down, of course, but they're still selling quite well and holding their value. It's really these investor built condos that we're seeing, particularly in the city of Toronto, that are flooding that amount of inventory, right? At the end of the day, there's a ton of condos for sale and it's still a concern, but it really is those investor style ones that make the stats even worse than they are when you start to break it down. But Matt, the other thing that I just want to mention for everybody out there is, you and I have picked at this a couple times now. I think one of the concerns with condos in general is that you have to watch out for is just that reserve fund, because we've seen with inflation that the rate previously that condo corps and property managers were recommending the contribution to that reserve fund was based on a steady inflation rate, and we jumped up way past that, up to that 7% mark there for a while. And so what's happening is that elevator that they had budgeted to replace, or the roof, or whatever it may be, that reserve fund isn't built big enough for a lot of those potential repairs coming down the road. So it is something that you need to be watching out for, I think, in the condo market in general right now.
Yeah, I think Windows is the biggest thing.
Windows for sure.
The price of that, like these places just don't have the money there. And now more than ever, ensuring that a condo corp has a reserve fund that is proper. Like if they have anything that needs to be done within a couple years and that reserve fund is slacking, you're going to be paying a large sum of money out of your pocket.
Yeah.
So ensuring that when you're putting an offer in on that, you're working with a real estate agent that understands the reserve fund, has the lawyers in place that will
sure.
guide you on that as well, because that's going to be a problem. But also going back to the municipalities, because they're not getting all these development fees, ultimately we might see the property taxes start to increase as well. Sure. So, and then when you look at a condo, that's a double-edged sword now. You're getting the increase in the taxes and in the maintenance fees. So you need to make sure that the building you're looking at is well managed so that it lessens the blow significantly.
This slide should also say property taxes, because I think that is something that we need to talk about in one of our next videos, because MPAC hasn't updated their assessments like they were supposed to in 2020. They put it on hold. We're still going on 2016 numbers. And so that's going to be rolled in for everybody at some point.
And ultimately, that was the development charges that they decided to increase by 100%, 200%. They went crazy on the development fee side. So now that has to scale back because builders are saying, listen, these are costs that we pass on to the buyer at the end of the day, and they can't afford to include these in there. So you need to scale them down. I believe they will scale them down. So really, how else are the municipalities? Municipalities can't borrow money. They can only raise it and use it. So either the services are going down or they're going to be asking for more on the tax side.
I think that was very insightful, man. I'm very glad that we mentioned that today.
And then one other thing to go back to that other chart very quickly, this was the one before that was, the amount of jobs. We had the most construction cranes in the sky in Toronto. It was the most combined, like every other city in North America had less cranes combined than Toronto did at once, right? So that's going to be a lot of construction jobs that also feed into other jobs that are at risk here as well. And this is kind of why we put that in there, because if we're only selling 42 units,
new units
in Toronto, there's a lot of jobs at risk there. And at some point, the government is going to step in because there's far too much that could go wrong in this sector. I think for this all to really go too south, but there will be cracks. There will be cracks for sure.
Yeah. A couple takeaways there. I think, it's anecdotal, but again, looking at that, I've got a few friends and people that I know that are either in new construction or whether it be working for the builder or just in the trades. And there's one guy that I see all the time that does concrete, and he's like, yeah, I'm off today. We're not pouring anything for now. And then I see him again, a month later. Yeah, off again, still not pouring anything. Things are slowing down a little bit. I think that's important to note. Watching the way this unemployment could hit us, I think is important to note. And then definitely those property taxes or something just to kind of start being more conscientious about. I know in all of our offers, we've got a clause in there that states buyers, sellers, agents, everybody acknowledges we are not in control of what happens with those assessments. But I think now more than ever, because we missed 2020's assessment, I think it's something that as agents, we need to make sure that we're preparing our buyers for, just to be aware of, so that they can budget in. All right, talk to me about this deficit.
Well, we kicked out the last prime minister because their deficit was going to be 40 or $60 billion, something around there. And, it was clear when they skipped putting out a physical budget in the last couple months that it wasn't going to be too pretty. and they wanted to extend it out to the fall so that they could probably better dress it up. It's maybe on the low end going to be $80 billion deficit. I think that potentially it could be over $100 billion. Just based on what we saw in the U.S., which the U.S. is going to be, I think it's $2 trillion over a 3 or 4 year period. So I think most governments around the world are going to be running significant deficits. Again, to print their way out of it. That ultimately will go into hard assets like real estate. How long that takes to flow in is going to be dependent on how that money is distributed. Does it come through wages? Is it handouts? We'll kind of see how that plays out. But there's more, this just means more money into the system. So at some point, you're going to see the price of a hard asset like real estate start to rebound. And this is what I loved about my clients buying this bungalow in Newmarket. Did it need work? Absolutely it did. But there's a lot of people in the trades that are looking for work now who are willing to do it for a little bit cheaper than what we were seeing in the past. And then by the time they get this place all fixed up, they have 3 units to rent out of it. This money is going to start flowing back into the system, and we're going to see, those prices of those properties start to accelerate just because the value of the currency is being depreciated.